Welcome back to Investing Talk Podcast.
Today, we're looking at Lumentum, the optical networking player that has been absolutely central to the AI infrastructure story this year.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis. Lumentum has been one of the biggest stories in the technology infrastructure space.
And not just because the stock has, well, exploded.
Exactly. It's because the company has pulled off this strategic transformation that, few people really saw coming, even, 18 months ago?
Okay, let's unpack that. Because for years, Lumentum was, the reliable but maybe kind of boring supplier for telecom and 5G network.
A utility play, basically.
Right. But that whole identity seems to be vanishing fast. When you look at the numbers, the shift is just staggering. Lumentum is fundamentally turning into an AI infrastructure leader.
I'd say that transformation is already complete. We are no longer talking about a company just dipping its toes into AI.
And the key stat that just jumps out is that over 60%.
60%. Over 60% of its current revenue is now firmly tied to AI infrastructure and cloud services. That's a pivot of immense scale.
How does the company even do that so fast? Changing the focus of a massive hardware manufacturer that quickly is notoriously difficult. Was it an acquisition?
No, and that's the impressive part. It was mainly strategic repositioning. They leveraged their core expertise in photonics, but just aimed it at a different, much hotter market, the data center.
So they didn't need to buy a new company?
They did. They just re-engineered their existing high-speed components and ramped up production for these huge, urgent orders from the hyperscalers. Your Microsofts, Amazons, Googles.
That pivot led to a real inflection point in their performance, right?
It absolutely did. And that brings us to the Q1 numbers, which were explosive.
They completely validated this entire AI thesis.
Exactly. We saw the Q1 fiscal 2026 earnings beat. Revenue hit $533.8 million.
Which, for context, is a massive jump.
It's a 58.4% jump year over year. They didn't just meet expectations, they blew right past them. It shows the underlying demand is just far exceeding what analysts were even modeling.
And the profitability came with it. The EPS for Q1 hit $1.10, also crushing forecasts.
That's the key. When revenue's up nearly 60% and you're also beating on profitability, that's a really compelling moment in any growth story.
And it's not just looking in the rearview mirror either. The guidance was incredibly strong.
Extremely strong.
Yeah.
Management's guidance for Q2 is projecting revenue between $630 and $670 million. That's another huge sequential jump.
With earnings per share projected at $1.30 to $1.50. So management is basically telling the market this isn't a one-time thing.
Right. They're confident this sharp step up is sustainable. It validates that Lumentum is now a primary go-to supplier in this AI infrastructure race. And that, is why the market is paying such a premium.
Okay, so that's the what. A massive revenue explosion. Now we have to talk about the why. Why Lumentum? There are other optical players out there. What's their competitive moat?
This is the core of it. It all comes down to their proprietary photonics IP. They essentially own the blueprints for the most advanced light-based components used to transmit data at high speeds.
Can you break that down a bit? I keep seeing these technical terms like EMLs.
Sure. So we're talking about highly specialized components, specifically external modulated lasers, or EMLs. Think of it like this. Imagine high-speed data is a highway. Most competitors use lasers that are kind of like a car trying to accelerate and brake really, really fast. It works, but it generates heat and it struggles at the highest speeds.
Okay, and Lumentum's EMLs.
Their EMLs are different. The laser light source is constant, and the data is encoded onto that light externally. It allows for much higher data rates, better power efficiency. It's just a superior technology for the highest speed links, the 800G and future 1.6T connections needed inside these new AI data centers.
So it's the classic picks and shovels play for the AI gold rush.
It's a perfect analogy.
You can buy all the NVIDIA GPUs you want, but they're just expensive paperweights if they can't talk to each other fast enough.
And that's where Lumentum comes in. And this proprietary tech creates a really important business advantage: high switching costs.
So once a hyperscaler designs Lumentum's parts into their network,
they are extremely reluctant to switch. Replacing them means redesigning the entire optical backbone of your data center. It's a massive risk and a huge expense.
So they're building loyalty through engineering complexity. But what's next? Are they staying ahead of the competition?
They seem to be. They have key products coming, like the 1.6T transceivers we mentioned. But the product everyone is watching right now, the one that's central to the whole bull case, is the R64 optical circuit switch.
The R64 switch, why is one switch so critical?
Because AI requires this massive dynamic connectivity. The R64 is an optical circuit switch. It uses light to directly switch connections between servers.
So it's like a high-speed traffic cop for light beams instead of data packets.
Precisely. It lets the hyperscalers reconfigure their AI clusters almost instantly and with way less power. It's seen as a critical piece of the puzzle for scaling up these GPU clusters into the tens of thousands.
And when you have a product like that the biggest spenders in the world are already citing as critical,
It validates the entire long-term growth story. It proves you're leading the curve, not just following it.
okay, let's ground this back in the financials for a second. You can't pull off a pivot this big without capital. How's our balance sheet looking?
Overall, it looks pretty solid where it counts. On the liquidity front, their quick ratio is 1.02, current ratio is 1.37. More importantly, they're sitting on nearly $877 million in cash and short-term investments.
That's a good war chest for funding more expansion.
A necessary one. And they've also secured a new $400 million revolving credit facility, which just gives them more flexibility to keep investing in R&D and manufacturing capacity. They don't want to be constrained by cash flow right now.
It sounds like a company managing its growth well, but there are always risks, especially moving this fast. I see a bit of a paradox in the financials.
You're talking about the negative margin.
Yeah, how can the EBIT margin still be negative at Hemeta 2.8% when revenue is up 58%?
It's the paradox of hypergrowth. That negative margin reflects the heavy upfront investment needed to fund all this. R&D on 1.6T tech, CapEx for new clean rooms. Plus, their debt to equity is a bit elevated at 2.77. It's manageable, but it's something the bears are definitely watching.
So the market is basically saying, we'll forgive the lack of profit today because we believe you're spending to guarantee huge profits tomorrow.
That's it, exactly. Which brings us to valuation. The stock is trading at some substantial premiums.
The expectations are just aggressive.
Very. Analysts are looking 2 years out. The market seems to be baking in estimated 2026 earnings per share around $5.13.
$5.13. That means if you're buying today, you are betting they hit that number 2 years from now. It implies an absolutely explosive increase in earnings.
It does. And it means any hiccup, any delay, any softness in spending will cause an outsized negative reaction. There's no room for error priced in.
And that aggressive expectation is reflected in the technicals, right? I mean, this stock has been a monster performer in 2025.
Monster is an understatement. It surged over 370% year-to-date.
The chart just looks like a rocket ship. It recently hit new record highs near $396, and it's trading way above its 50-day and 200-day moving averages. This is a breakout fueled by a real fundamental change.
And that kind of move doesn't happen without big money behind it. Institutional ownership is exceptionally high, reportedly over 94%.
94%. So the smart money is all in. They're convinced by the moat.
It seems so. We've seen firms like Highland Capital and Exchange-Traded Concepts taking new big positions. It validates the thesis that Lumentum's tech is just indispensable right now.
But with that high momentum comes high volatility. The beta is 1.48.
Yeah, which means it's theoretically almost 50% more volatile than the overall market. It amplifies the swings both up and down.
And you see the analysts just chasing the stock price higher. Major firms raising their price targets by $50, $100 at a time. They're trying to rationalize the valuation, but the price keeps running ahead of their models.
Which is why the next few months are so critical. So let's look forward. What are the key catalysts we need to watch?
First up has to be that next earnings report, right? They have to prove they can actually hit that aggressive guidance.
Correct. The number one catalyst is the Q2 fiscal 2026 earnings report, due in February. It has to validate that $630 to $670 million revenue range. Any miss will be punished severely.
And the second catalyst is the product story.
The R64 optical circuit switch. We need to see the official launch and, more importantly, successful customer integration. A formal announcement of a big named customer win for that switch would probably drive the next major leg up.
What about longer-term, more speculative buzz? Any M&A talk?
There's always chatter. Given their IP, Lumentum screens as a potential target for a much larger semiconductor or networking player that wants to buy their way into the AI optics space. Think a Cisco or a Broadcom, but that's purely speculative, of course.
So let's pull it all together for the bear case. If you're arguing against this stock right now, what are the biggest risks?
Number one is just valuation. The stock is priced for perfection. There's zero margin for error.
And since their fate is now tied to AI, that becomes their biggest sensitivity.
That's risk number two, AI exposure. If the hyperscalers tap the brakes on their spending for even a quarter, Lumentum will feel that pain immediately.
And third, there's always the risk that a competitor catches up.
Absolutely. The competition risk. This is a very lucrative market and rivals are well funded. Lumentum has to keep innovating and executing flawlessly to stay ahead.
So what we have is a high beta AI optics leader sitting right at the center of this massive infrastructure build-out. The tech is real, the institutional support is there, but the price reflects expectations that are, well, sky high. The big question is whether their moat can justify that massive premium over the next couple quarters.
If you want to keep up with these massive market moves, make sure you hit that subscribe button for more of our analysis.